Jay, we'll leave it at that. In fact, let's take that discussion forward. Probal Sen as well joins in on the show right now. Probal, hi, morning. Good to have you on the show. What can we expect from Reliance today, Probal? Especially when it comes to the rights issue, because I think that's more market moving today as opposed to anything else. You know, the point that Ajay as well highlighted, it has to be seen what kind of money they're raising, how they're pricing it. What are your own expectations?
No, I think, by all indications, I would imagine that, around 40,000 crores is what they would probably target. And that's just literally, I don't have a absolute basis for that number. The fact is that if you were to divest about 5% on the current market cap and give something like a 20% discount, then that 35 to 36,000 crores is what you come at. Because remember that, in this kind of an environment, even that amount would imply that, you're raising about 18 to 20,000 crores from the retail investors or retail plus institutional investors who hold the stock other than the promoters. That's a significant amount of money. So if you were looking to do that kind of a fundraise, there's two ways to do it. One is that you give a 20% discount on 5%, or you say that you'll give a 10% dilution, but you will give a very big 50% discount to make it very attractive to investors. So how they do it, we'll have to see. But I guess something in that range is what one can look at, similar to the money that they've raised from Facebook. And whichever way you look at it, there is frankly a very marginal impact on EPS, but I think it's got a significant confidence building measure to potential strategic investors that the promoters remain deeply invested in the business. And I think that's an important message. Plus, of course, it strengthens the capital structure by pumping in more equity and reducing either leverage or retaining more liquidity in what is going to be a tough 12 months for anybody in this energy space.
Yeah, absolutely. On the basic earnings then, Prabal, what's the expectation?
I think pretty similar to the numbers that you flashed in terms of consensus. We are also building in somewhere around 110, 106 to 110 billion in net profits, which is about 10 to 11% lower on a QOQ basis. And obviously that is driven by a 5 to 7% decline QOQ in terms of EBITDA as well. In refining, it's going to be a fairly tough quarter. I think EBIT should drop to somewhere around 44 to 45 billion, which is a fairly steep dive from a 55 odd billion, if I remember correctly, for Q3. And similarly, Petchem, which already had a fairly weak Q3, I think you'll probably see a further 7 to 8% decline QOQ on the Petchem front as well. I think what Ajay mentioned is that this quarter you only had a 10-day impact of the shutdown or the lockdown in any case. But what will be more important, I think, from the management is to have guidance in terms of what trends they are seeing, both in terms of refining and petchem over the next couple of quarters. What is encouraging for Reliance, in my sense, is that Western Europe is looking to at least reopen to a certain extent, and that's a major market for them, at least as far as refining is concerned. But on the petchem front, given that the primary market remains the domestic market, I think it will be interesting to hear their views and look at how they're looking at the demand environment shaping up, particularly in India. Other than that, Geo obviously continues to be the driver at this point. It helps offset a lot of the damage from refining and petchem. Our sense is that Geo EBITDA will continue to be in the above 40 billion even for this quarter. What will again be a monitorable for that business is how is any commentary on how the FTTH business is ramping up, because that's something that is going to be a key monitorable over the next couple of quarters. And of course, some more view on how the exact structuring of the arrangements is with respect to the Facebook deal, particularly on the retail GeoMart front with WhatsApp, and even on the basic deal which they are doing on Geo platforms. So all of those monitorables are there. This quarter, yes, I think everybody knows that it's a tough quarter, but I think more important is what is the view from second quarter onwards for every key business that Reliance has. I think that will be the main thing to look at, particularly from strategic deals perspective also with respect to the Brookfield deal on tower, any update on infra invest, and any progress, if at all, on the Aramco deal as well.
Okay, fair enough. That's the general consensus that we could see Jio deliver a strong set of numbers all round. But what about the margin number? What are you penciling in over here in terms of the kind of support that it could get from the petchem as well as telecom business? And what are you expecting when it comes to the GRMs?
Well, what we are building in right now is GRMs of around, somewhere around $8. That's what we are building in. In terms of overall margins, obviously across the board, I think you'll probably see a decline, particularly in terms of petchem. As I said, there's probably around around a 10% decline in terms of EBIT margins that one can see on a QOQ basis. Geo, I think EBITDA margins should not really drop. In fact, if anything, I think Geo EBITDA margins, at least for this quarter, should remain fairly steady on a QOQ basis. And even for retail, at least the feed we got at least till about the beginning of March was that the numbers remained extremely strong. Obviously, the last 10 days of the quarter, where everything was pretty much shut in the country, would have an impact. But on an overall basis, I think the margin hit is the most that you're seeing, almost a 1.2, $1.3 QOQ hit in terms of GRMs, and I think a couple of 100 basis point reduction in petchem margins on a QOQ basis. So that's where the hit is coming from primarily.
Thanks very much then, Probal, for joining in and giving us your estimates for Reliance Industries and what exactly we can expect from that counter.